Okay, so let's take a look at 3 stocks and determine where, if the stocks are potential short ideas. We begin by taking a look at Microsoft. This is a 3-year monthly chart. Before I do that, let's go to the weekly. Just want to show you that we can also see that on the weekly, based on the previous highs, we had what is now becoming obvious, that some of the stocks here that were making new highs in 2015 were doing that to the declining RSI strength. That's negative divergence, which might explain the reason why the stock came off the highs there. Is the stock a short right now, or can it be sold? The answer is very simple, is MSFT, Microsoft, does not meet the minimum requirement for a momentum down move. You can see that the RSI is not trading at 3-year lows. Of course, MACDs are not trading at 3-year lows. So in terms of timing, even though the stock could not go lower, we are looking for a precise set of circumstances, which is 3-year lows on the RSI and the MACD. So MSFT would not make that cut. We take a look at WFC next, or Wells Fargo, as a large cap stock. And again, we go back to that high on the weekly. You can see higher highs in price and lower lows in technicals at the highs there. And just one thing I wanted to point out here is that this negative divergence issue can be confusing. You can see lower lows, higher highs, yet even though the stock initially went down, it finally managed to move higher. Why? Why did it move higher? It's very simple. You have uniformity support here at the 50 line, which means there's a bounce. So there's a bounce here because of uniformity support at the 50 line, which is a re-entry into the stock there. Double bottom support at the 50 line on the weekly, which is a re-entry there. So you have to marry this negative divergence business with what happens at the 50 level. And that's why you can see that even here was support around the 50. It wasn't uniform action, but it held above the 50 for a re-entry there. Now, in terms of timing, because I want to keep this video short, so you can at least consider this one before the session here, which is right now. Let's just show you what the markets are doing. Markets are trading. The Dow was up about 120, 130 points in the pre-market, and it's confusing a lot of people in terms of what the market wants to do. Maybe I'll touch on the market here towards the end of this video. But here we see that Wells Fargo has been a short since this break here. It met the minimum requirement as the RSI moved below 2015 monthly closing low. We can also see that the RSI recently went to 3-year lows in December. Stock's been down since. MACDs are also trading at 3-year lows. So yes, this one meets the minimum requirements. And also we can see that the MACD has moved below 0. So in terms of timing, we would have to go back to that weekly chart and find the latest potential entry, which would be this recent weekly closing low. Or you can actually even take this recent weekly closing low in January, since it's still around that level. It recently broke through that and has not closed above that level. You can see that ever since this break below there, below, let's call it 48.50, it hasn't closed above 48.50. So you can use 48.50 as your entry and ask questions later. Otherwise, if you want to really play this perfectly, if you don't have a position, is to wait for it to move below this recent weekly closing low in February. And since it has had 2 weeks above that close, any subsequent close below that would be week number 4 at the minimum, which is what we want. So you have 2 options here. Once you figure out that your monthly chart is bearish, you have to find where your entry is. And the monthly chart most recent sell signal was here, so we missed that. If you missed that, which was at about 50.8, somewhere around there. So you have to go to the weekly chart for entry price. And as I'm saying, you can either use this as a sell signal here because the stock broke down there and is still around that level, or you can use the future break below this recent weekly closing low, since we've had 2 weeks of rest since that was recorded. And that's how you would play that. Now, I want to take a look at the other one, which is WMT, Walmart. And we go back to we can go to the highs. Number one, take a look at this entry here, support around the 50 with uniform action, and I'm just touching on things that I'm looking at or I can see visually as I go through this. Negative divergence there. Subsequently, the stock went on a relatively big drop because it never held at the 50. Right, the 50, it slid through 50 and stayed below 50. That's why it continued down. And I think the question here was and is whether the stock is a short based on, for example, uniform activity. In fact, let's go back and take a look at the monthly. And the monthly, let's go back about so we can see what's going on here. So bear with me. Let me change this to about 5 years so we can see what happened before the drop. And you can see for this plunge here, this period, so coincides with this break to 3-year lows. So here, 2015, we go back 2012, so there's your 3-year lows. So it moved to 3-year lows here in about April of 2015, which was somewhere there for the drop from 80 all the way to about 56, 57. And now the question is whether this is giving us, let's go back about 13 years. The question was posed whether this was also coming back to test this line here, previous break, or you can draw it that way. So this break here recently is being tested here again. So depending on how things go, remember this is February 29th, and at the beginning of next week, let me confirm that, we are going to be entering a new month on Tuesday. So on a month-to-month basis, if you're watching this, if it moves back below that black line, that would be a sell signal because it would be a backtest failure. So yes, there's one way of playing this. As we come closer to the end of the month, if next month becomes a down month, then the problem here is that this could actually call down, and that would be another sell signal right there. So yes, and in fact I think I saw this on the weekly, which is as we come, this is Friday, and of course as we come into the end of the week, now the question becomes, and I'm pretty sure a lot of people are playing the breakout possibility here. This move here above, let's call it 67, is a breakout potential, and I'm pretty sure back in the day I would be playing that for a move higher, because I can also see the possibility of 13-week moving average crossing above the 34-week moving average, which seems very tantalizing. And so, but if you go back to the recent break on the RSI on the weekly was here in February, and so what we are doing here is we can see that that break corresponds with the move off the highs. We can draw a line here, and you can see that since this is Friday, if at some point in the next 1 or 2 weeks, if this is double top, then instead of this being a buy signal, this is actually going to be a sell signal. So in terms of timing, clearly you can see that WMT here is already broke down to 3-year lows, and really what this video should be about is the stressing the idea that we need to be looking for stocks making 3-year lows, period. And that's where the momentum is. We can try and find other reasons and this and that, but at the end of the day, if you're looking for momentum is going to play out in terms of the monthly charts breaking down. That's where you get the biggest move and the biggest bang for your buck. Now take a look here at the NASDAQ. As I said, I was going to touch on the market here, and what I think the market is doing, and I'm going to keep it simple, is coming back to test this recent break line there on a day-to-day basis. And depending on what happens, if the market can stay above that red line, the market might move higher. But I strongly still believe that around here we stall, and eventually we move back after showing resistance yet again on this red line. That's my feeling there. Let's take a look at the 30-minute chart, and you can see 30-minute chart for the NASDAQ also showing that it is coming back to test that top side. We haven't moved above that. There's also a line, maybe you can draw it like that, confirming that there's 2 lines there showing resistance. So even though everybody's freaking out because the market is moving higher, because most people, especially Muathe.com subscribers, are short based on my analysis, a lot of people are freaking out. But I still hold the view that markets here more than likely are set to stall. And take a look at the hourly. I still hold the view, and I could be wrong. I do acknowledge that we are coming back to test this recent break coming off December's break. December's break was serious because we had this big drop. And so here we had uniform activity, rejection for the highs there. Market went slightly higher, resistance on the same line, and again we are coming back here. If we do confirm resistance on that hourly or 30-minute chart, the next swing trade, in my opinion, I've been saying, is down. Marry that with, for example, let's take a look at another market here, FTSE, the FTSE, right? Live trading for the FTSE, 30-minute chart. You can see that other markets are pointing to potential resistance. Let me do that a little bit higher. Resistance on this line. It's not going where I want. Right there. Potential resistance on that line. But I think the hourly is going to show it better. So the 2-minute video has turned out to be a little bit longer than I thought. But higher highs in price. Technicals are still making lower lows. We are coming back to show resistance on this level here. Very critical level, because as we broke through here in December, markets really pressed the agenda to the downside, and we haven't been back to this level here, which is this break. So right now I think we are coming to potentially stall on that level. I personally think that even though everybody has become a little bit concerned about the potential for markets moving higher, that this is where you make a stand and see where the markets pull back. Now, in the interest of being a neutral analyst, I want to take a look at one chart that I mentioned yesterday that is making the strongest case for the market, and we go to the Dow monthly. Right now, this is absolutely strong for the bulls. The Dow is potentially coiling higher and now above 50. That's a big deal. If it stays above 50 and continues to hold above 50, that's a big deal. The last time it did something like that, it moved for about 2 months for a major move. Let's call it about from 1600 all the way back to 1800. That is 2,000 point gain. And if you take a look at a long-term monthly view, you can see that really we have to be very cautious here. In this video, we've talked about markets when they make support at the 50 level. Take a look at support at the 50 level on the monthly for the Dow. If that's all you know in the market, then this was a buy because of uniform activity, double bottom support. So let's show that. Double bottom support here at the 50 level, and it bounced higher. So the market was a buy during this pullback. And that pullback was serious because it gave people the impression that the market was going to go back to its 2008, 2009 bear market trends. I remember that was a scary time for those who were, deciding where the market was going to go. Here, support with uniform activity at the 50 level on the monthly for a re-entry there. And now, if this continues to be double bottom support, and if the market can build on this, the risk is that we are actually looking at the potential for the markets eventually to bounce. So this monthly chart moving back above 50 is a big deal. Okay, so that's the risk, and that's why all our trades always should have, at the very minimum, a 5% stop or a stop of some level, because there's always more than one way to look at the markets. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. E-A-C-S-S. Yes. Mwah.